Very good afternoon, every one of you. Especially, we warm welcome and greetings to our special guest, Mr. Annamalai sir, from Annamalai Capital's Market Academy. Annamalai Capital Market Academy, as well as Annamalai Capital Services Limited, is with us. And this is a topic what we wanted to talk about today and the day after tomorrow: financial technology, innovation, and engineering, especially on FinTech, enterprise innovation and financial engineering. We'll be talking about it. And before we get into the session, I would like to give a few details about the emerging industry. Finance, we all know traditionally is all about like banking, as we were just chatting about, you would have heard about it, to improve financial activities with the technology, innovation, and so on. So the use of smartphones today, right, with mobile banking, investing, borrowing services, and more we can speak about blockchain and cryptocurrencies, right? Those are the examples. Technology aims to make the financial services accessible to the common people, that's what everything is all about, seeing the customers having more accessibility, better services that can make your business viable, making a new business model. So FinTech is a new financial industry that applies technology innovations to improve financial industry. Like as we have seen in the earlier time, I think our chief guest will be addressing more about it. And after that, we'll be talking, as he mentioned, we'll be having more on the finance and banking later. So further to that, we'll be talking about the FinTech areas, scopes like blockchain technology, cryptocurrency, and digital currencies, and so on, which will be done. It's a sequence. Basically, we will move on before we get into the other two areas like your merchant banking and security analysis, portfolio management. Basically, it's a sequence we have planned for the next like 2 to 3 months time, and we will be starting as beginning. We have our eminent speaker and the guest and the trainer here with us. We welcome you, sir, for this occasion. Thank you for accepting our invitation and joining today. And I would like to officially call Mr. Professor Lakshmikant to introduce our trainer of the day today.
Very good afternoon to all the dignitaries, professors, and students of ASBM present online. I take the privilege of introducing our guest speaker today, Mr. K. Annamalai sir. Mr. K. Annamalai sir is an investment consultant, stockbroker since 1990, who is the managing director of Annamalai Capitals Private Limited. Also, he established a skill-based financial training center called ACS Capital Market Academy, associated with the NSC and BSc, to provide hands-on training and practical-oriented applications in financial market. He also a founder member of Coimbatore Stock Exchange Limited. He also served as a treasurer, vice president of Coimbatore Stock Exchange. We welcome you, sir. And now the session is yours, sir.
Thank you. Thank you for a good, nice introduction. And it makes more expectations also. And my screen is visible?
Yes, sir, it's visible, sir.
Okay, slides are visible. Okay,
yes,
audio is okay, audio, video is okay?
Fine, sir, perfectly all right, sir.
Okay, good. Good afternoon, friends. I really appreciate your management and the faculties who are trying to give you the latest updation on the subject. Whatever happening in the financial market, and they try to give you the best and the latest technology on the financial side. And it really shows their concern how to enrich you on the latest knowledge. That's what is the main thing. I really surprised when he selected this financial engineering. And normally, that the students of MBA, that they may not come into this line of financial engineering. Basically, this all goes to MBA economics, and the people who studies banking, and all these people only, they will come into this kind of a subject. However, I take this really, I thank them for choosing the subject, and you are fortunate to have this kind of knowledge. Friends, I just go into the subject that when you call it as a financial engineering, there are two words involved in that. And I expect more of the interactions from you, so that will make me more active and happy. And are you ready for an interaction, or you want a one-side lecture? Can anyone unmute your mic from the student side? Tell me that I want to have more of interactions. Anyone?
Sir, we are ready for interaction, sir.
Good, good. Thank you. Thank you. Okay, let me split the word that one is the finance and another is an engineering. Now, can anyone tell me what do you mean by finance? That every day we are talking about that. Every common man talks about finance, but particularly you are all student of finance and MBA. And can anyone tell me what do you mean by finance? Anyone? Whatever you know, you tell me. It's nothing to do with that. It's not examination or it's not an interview we are doing. And just to understand, because we talk about finance every day. Everyone, whether people are educated or uneducated or studying or not studying, graduation or post-graduation, everyone talk about, finance. Then I'm going to ask the next subject is that what do you mean by engineering? Because we all talk about probably, I don't know, somebody would have done BE and would have joined MBA. I don't know. And but anyone can tell me what do you mean by finance?
Sir, finance which deals with money and investment stock.
Okay, it deals with money. Okay, okay. Then my next question is that Kavin, thank you.
Yes, sir.
Thank you, Kavin. That can anyone tell me about what is engineering? Someone is murmuring. Can you make it louder? Sometimes, the problem with the, online learning, people at home also, they can participate. Behind the people, they may sit sometime and talking. And sometimes I used to get a lot of information from the home, what they are talking. Okay, what is engineering? Anyone? Simple word, no? We are using this word every day. Okay.
Sir, technology, yes? Sir, which deals with technologies.
Okay, then why it is called BE engineering, then separately BE technology? If it is same.
Application of artwork.
Application of? Tell me whatever you know, tell me. Don't bother about right or wrong. See, everyone talk about in the house, parents, educated, people say that my son is an engineer. I'm studying BE engineering or MA engineering. I'm doing MBA finance. All these things we are doing. But when we ask the simple explanation about what is finance, we are unable to describe what is finance. And if I ask you about what is money, because all are working for money. Everyone needs money, right? Without money today, you cannot survive in the world. Everyone is after the money. But if I ask what is money, how many of us are able to explain what is money? We day-to-day life, we use a lot of terms, we use a lot of words without even understanding the real meaning of that. Lot of things we do in our day-to-day life, but if you ask them to explain, then we may not be able to explain. Okay, the finance is about the bottom line of the business. There is a lot of distinctive difference between money and finance. I will explain. So when we talk about finance, what is a finance? Finance is the business all about. Every business is just acquiring an asset, manufacturing, a real asset, tangible asset, financial assets, valuation of assets, all these things are making profit, sales, that profit, loss, sales, everything comes under the finance. Ultimately, when you talk about the finance, it is a valuation of the cost of finance and the enterprises. So money, when I have a packet, the currency or a money, that is different. But finance is got a large understanding that when we talk about finance, when we study about the finance, whether it's a family or it's a business, it is ultimately the business activities have been valued in terms of finance. But now we are going for money versus finance. When we talk about money, it's basically a rupee, and it's all talking about monetary economics. Because when we study, especially the students of finance or a marketing or at a level of an MBA, we need to have a better distinction between what we talk about the money and what we talk about finance. The financial is more talk about return and risk. When we deal in a business, what is a risk? We should understand the risk of anything. We talk about risk is associated in our life. Without risk, we cannot give. But what we need to learn is that how to manage the risk. Friends, let me make it very clear, but risk is associated in our life every day. The life is not without a risk. But I'll ask you one question, that can you avoid risk in your life? Can anyone tell me in a day-to-day life, what is the risk we face? Or otherwise, what is the risk you feel that it's a risk to us? Can anyone tell that what risk we normally face? Let me know that how many of you understand what is a risk? Can anyone tell me what is a risk? Risk means what? Risk. This is risk. That is. What do you mean by that risk? Just tell me, anyone. Yeah. Pardon?
Possibility to loss.
Possibility to
loss.
Possibility of loss. That is your normal risk in the life. See, please always understand the question. Don't preconceive the question and come with a prepared answer. I asked, I am nothing to do. I am not talking about a subject at all now. It's a normal family. You are in a society, in a normal life. You forget about your MBA, forget about today what we are talking about a financial engineering, anything. What do you understand about the risk? What do you mean by risk? It's a common question I am asking.
Situation involving
danger. Anyone?
Exposing danger.
Pardon? Exposing?
To danger.
Exposing is to a danger is a risk. Okay? Correct? Yes or no?
Yeah.
Gentlemen, I don't know. Can you tell your name?
Yeah, Lokesh.
Lokesh, you have answered that exposing to a danger is a risk. Okay? Now, I agree. Now, I'll ask one more question that, okay, if you are sitting at a home, watching a TV, do you have any risk?
No.
Okay. Now, you are riding, you have a bike, you have a car?
Yeah, I have a bike.
I could see your bike. It's a Harley Davidson or what?
No, it's CBR 250.
It's what is that?
CBR 500.
Okay. I don't know much about that. Okay. Now you ride your bike. Do you have a risk?
Yeah, of course.
What is the risk?
To meet an accident.
Yeah. Okay. You may meet with an accident. I put it like that. Okay. Now that is then. Do you avoid riding a bike?
No.
No. You are still riding the bike.
Yes.
That means what? How you manage your risk?
By watching the lanes and minding my speed. Protecting my head with helmet and gloves and everything.
That is exactly. One point is that you cannot avoid the risk. Now you are managing the risk, right? Okay.
Yeah.
How you manage the risk? You wear a helmet. You follow the traffic rules. You go at a reasonable speed. Okay. Then still are you safe?
No.
No. Then what still more, what kind of an accident may happen?
We can jump to car. Bike is too risky.
Pardon?
We can ride in car or we can go in public transport, though it is risky.
No. Now restrict. No. Don't go to other point. Restrict now. You are riding a bike. Okay. Let us keep going in that. Okay. So that the subject you will understand better at a later stage. Now everyone is listening. You are interacting. I like that. Okay. Now when you ride the vehicle, what is the risk? You may face with an accident. You may meet with an accident. Right. That is a risk. But because of that, I cannot stop riding my vehicle. I have to go. So how I do that? I manage my risk. How I manage my risk? I wear a helmet. I follow the traffic rules. Then I go at a reasonable speed, restricted speed. Then by doing the three of this act, are you still safe or are you still out of risk? I will put this way. Are you still out of the risk?
No. Not
no.
Out of
Then
the
what
risk.
else balance risk are there?
I can mitigate my risk, but one more risk, I can commit accident. I mean, I can.
That is the main risk. That is what I am telling. Now, how we are mitigating the risk? That is where we are discussing now. You come to that level.
Okay, so we are mitigating by avoiding overspeed and following
all these things. 3 point I highlighted. What else? Then, if all these 3 are sufficient, or still more, some areas are there. That is what I am asking.
So, what you covered is the major 3 points.
Then, if it is covered, still, are you fully managing your risk?
No. Still, we
then
have
what else bad? When you say no, that means something still left with. That is what I'm trying to get from you.
But we can, if we follow the rules, if an opposite person comes with high speed and drunk, and that is also a risk to us.
Exactly. I agree. Very good. Give him clap hand, friends. See, when we ride safe, still there is a possibility that the other person may cause an accident. Okay. So still you are not safe. Okay. Somebody then are you still or out of the risk? No. Then what we do that? There is one more excellent answer is there. Many of you know, but you are not unable to answer it.
Sir, restoring the vehicles insurance.
Restoring
the accident vehicles.
The medical insurance, taking up medical insurance.
It is not a medical insurance, friend, Mr. Kavin. It is a vehicle insurance.
Vehicle insurance.
It is an insurance for the vehicle, and that is a comprehensive policy. That is what exactly you should take. Medical insurance anybody can do, even without having a bike, right? What as a person, what we should do that we take an insurance that is a comprehensive policy. Okay, what it decides that what way it protects you, or how the insurance is managing your risk. It manages even if you have a self accident. There is a damage to your vehicle, there is a personal injury, right? Still, the insurance takes care of that. When third party cause an accident, causing damage to your vehicle or a damage to a third party vehicle, and also third party life risk, right? All these things are covered under insurance. Okay, that is what is that? So you are managing the risk or hedging the risk by transferring your risk to an insurance company, right? So you cannot avoid the risk of accident. Still, if you are safe, as you put it rightly, that location, somebody can come and make you an accident. So in order to protect from all these damages, we are taking an insurance cover. Okay. So this is what risk management. Correct. This is a general risk. I'm trying to explain, so much time I took it. So when you talk about the business, now what is the risk? The risk means that, see, the financial loss, somebody have put it, a financial loss. And this finance have to be ultimately managed, the financial problem. There are so many financial problems in the business. So when we talk about financial engineering, is nothing but, managing the financial risk, what the business are facing. That means what insurance also, again, financial engineering product. Okay, we are going to see that. We are going to look at what all things are. So when we talk about the financial, mainly what we have to study is that what is the risk and what is the return, how to manage the entire corporate finance, especially in not only in the corporate sector, it's maybe investment bank, maybe a commercial bank, maybe, variety of other financial intermediaries, non-banking financial sectors. All these things ultimately deals in finance. Whereas when we talk about the money, it's a purely a banking function. It's a monetary economics, RBI policies, credit policies, and central bank, how they manage the finance. So when we talk about the money, it goes to a totally a banking subject. When we talk about a finance, we come into mainly on a corporate subject. So ultimately, the financial engineering. Before I go into that, I just tell you that because every one of us talking about an engineering. Even I have asked the question even in engineering college. The people who are studying at the engineering, BE engineering, then when you ask about can you define what is an engineering, many of them are unable to. Sir, then engineering, I'm studying engineering, sir, mechanical engineering, sir, civil engineering. See, engineering is what? Engineering is to, the main engineering means is to design and develop and manufacture a certain product. So it's a design mainly and develop and manage and manufacture. The same way when we talk about financial engineering, it is a financial innovations. What do you mean by that? The process that seeks to adapt existing financial instrument and process to develop, design to develop a new one. Then the big question, actually, friends, these are all very, very, I'm telling you, little advanced subject. When we talk about a financial engineering, it requires a large amount of basic knowledge of the functions of financial market and financial products. We need to understand. Then only the financial engineering will be able to motivate this. But I am trying to give as simple as possible so that you get the basic to grasp. Okay. So it is a process to develop a new product. Then means what? The financial instruments. What are the financial instruments? Can anyone tell me one of the financial instruments? Can anyone tell me what are the financial instruments you know? Just tell me casually, no problem. Let me understand at least, what kind of knowledge you possess in this area. That is the reason, not otherwise. Don't feel that you do mistake. I normally, encourage students to have more interaction, then only you can understand better. Yes?
Currencies.
Currency is a financial instrument. Why say currencies? Yes, say currency. Okay. Yeah, okay. Then what else?
Bond, shares.
Bond, shares. Okay, very good. More participation.
Gold.
Huh?
Gold.
Gold is not a financial instrument. It's a metal. It's a material asset. It's an asset. It's a different. It's not a financial asset. Okay. Yeah. Any more? So there are a lot of existing financial instruments. We are going into that. We will discuss all these things. I think we have already spent more than 20 minutes and we will try to cover. So that there is a requirement of more financial instruments in the market. Mainly why we require to manage the financial risk of the market. Because always, the financial market requires innovations because of the existing financial instruments have a lot of drawbacks, a lot of inherited issues. So in order to overcome, depending upon the necessity of a globalization and everything, we require to invent or innovate a lot of new instruments, mainly to reduce the firm's financial risk. Fundamentally, why we study a financial engineering is that financial engineering is mainly to innovate a financial product, to reduce the firm's risk and also reduce the cost of financing and also tax benefit and to exploit the market inefficiency. So these are all the basic necessity of inventing here. Because when we talk about innovation, why there is an innovation? Why we require an innovation? Innovation is required to overcome the present problems. That is what we are innovating. So that is John Finnery, that how he defines financial engineering involves design, the development, and the implementation of innovative financial instruments and processes. and the formulation of creative solutions to problem in finance. This is what an expert definition in the economics. When we talk about financial engineering, and mainly it involves design. That's what an engineering. When you talk about design, so it's an engineering. The development, again, it is an engineering. The implementations and become a field of finance, so it become a financial engineering. And mainly to create, innovative and creative. And it give you a creative solution to the problem in finance. Okay, then let me ask you simple. I am going very, very simple examples to make you understand that, and what is the problem in finance? What is the problem in finance? Then why I should innovate something? For example, now it's a simple example I'll try to give you that many of our senior people in the family, whatever the money we saved, they deposit in a fixed deposit. Fixed deposit is a simple financial instrument. I hope that every one of you understand what is a fixed deposit. Fixed deposit is a term deposit, deposited money in the bank for a particular period, which earns interest. The interest may be payable on a monthly or a quarterly or annually or semi-annually, depending upon the term deposit terms and conditions. I hope that every one of you understand the fixed deposit. Now, what is the issue in that? The issue is that today the inflation is around 6.5%. Okay, somebody I think wanted to ask something. Okay, the fixed deposit is earning today around 6.5%, 6.5 to 7% interest per annum. That means this is the earning out of your investment. You are earning out of your investment. When the inflation itself is around 7% today, that means that your investment is not earning anything. Whatever the earning you get by way of interest, it is compensating the inflation. I'm sure that most of you understand what is inflation. It's a purchasing power. When purchasing power goes up, the money value goes down. When the money value goes down, whatever the money you earn, it does not meet your basic needs. That means the basic cost of living. So in a simplest way, I try to tell you that the 6.5% interest from a fixed deposit is not sufficient for me to maintain my cost of living. When the cost of living goes up, my earnings also should go proportionately. Otherwise, I don't earn anything. I remain at the same level. This is my problem. Now you understand what is a problem in finance. And so it was a problem. Now I need a solution. I need a solution. What is a solution? That means whatever investment I am going to make in any of the financial instrument, can I get more return than a bank rate of interest? You get my point, friends. So the issue is that the problem is that the interest what I'm earning from my fixed deposit is not sufficient to meet the inflationary pressure. Now, what else? I have to look for an alternative. So I need a financial expert. I expect some kind of financial innovation to give me an alternative way of investment. Thereby, I reduce my risk or reduce my gap or increase my return on my investment. Am I clear? The simplest way to tell you that. So what is a necessity? That is what it's telling. The financial engineering involves the design and development and the implementation of the financial instruments and processes and the formulation of creative solution to the problem in finance. So the financial engineering involves innovation and creativeness. How we'll do that? What kind of innovations are we doing? So the product, such as swaption and mortgage-backed product and leveraged buyout the futures trading, program trading, arbitrage strategy, index future, mutual fund, junk fund, everything, even what is your credit card, what is your debit card, mortgage securities, all these things are a financial innovations. Even in the introductory remark, Professor pointed out that, that we are going to talk about the cryptocurrency. That is an innovation of financial engineering, right? So these are all the product we are trying to do that. Then we will go a little bit deep into understand what is the financial engineering. So financial engineering refers to bundling and unbundling of securities. Okay, I bundle it sometime because to overcome the issues, present issues, and also I do the unbundling of the existing stuff. I split. Like, when I want to invent for an alternative for a fixed deposit, I go with the debentures. I go with the secured bonds. I go with the unsecured bonds. I go with the convertible bonds. I go with the tier 1 bonds, tier 2 bonds, or government securities, gilt-edged securities. Like that, then I also combination of convertible, non-convertible. I bundle it to something in order to overcome the risk management. So ultimately, this is done in order to maximize the profit using a different combination of equity, futures, options, fixed income, swaps, and so on. When we talk about, that is the reason I first started with my explanation to understand the risk. When we talk about the risk, the risk means, the simplest way to explain is that it's causing uncertainty. Okay, what is a risk? Risk is uncertainty. If there is a certain, there is no risk. When it is uncertain, it is a risk. Okay. Now, what is the normal business side? How to maximize profit? How to avoid my loss? How to hedge my cost of innovation, cost of investment, cost of operation, cost of financing, so on. When you talk about the cost of finance, when I run a big business, I require 100 crore of capital and I need a term loan and working capital. That means what? Any business requires a short-term funding and a long-term funding. Long-term funding, which goes into the investment of, that land, building, machinery, and so on. And whereas the short-term capital requirements meet the working capital, that means purchase of raw material, processing, labor, salary, rent, so on. So you have to differentiate between a long-term financial requirement and short-term financial requirement. But each finance have got its own cost of finance. Whether it is a owner's capital or it's a borrowed capital. Okay, you understand, friends? So so we need to have what should be the cost of finance. Can I borrow money at a rate of 24% or a 36% per annum? Then can I run the business with the kind of a cost of borrowings? So as a businessman, I have to always look at an option to source at a lesser cost of funds. Then I need to have such a kind of financial instrument, either for a lender or for a borrower. You require some kind of instruments that would meet the requirement of both as a lender as well as the borrower. So that, friends, when we talk about a theoretical finance and computer modeling skills, it's make pricing, hedging, and trading and portfolio management decisions. Fortunately, the professor have today in the introductory remark have pointed out that he is going to introduce portfolio management and fundamental analysis. All these things ultimately involving financial engineering. So financial engineering ultimately related with international financial market, also applicable to a capital market on the investment side, and also multinational corporate finance and a normal corporate finance. And again, financial economics, all these things again, is related with a financial engineering. So it merely means ultimately, I'm coming to the crisp of the definition. And it means that amalgamation of a computer science and economics and applied mathematics to devise the tools and techniques and model address the issue of finance. As a student, friends, if you'd like to go and specialize in a financial engineering, if you want to know more about financial engineering, if you want to specialize on financial engineering, you should have a better exposure and basic knowledge on a computer science. It is a combination and amalgamation of computer science and also a statistics. You should know about statistics. It's not a simple financial engineering. For example, the RBI governor, probably I do not know how many of you listen to the governor when he speaks about the governor. Raghuram Rajan, normally he talks a lot of things. He goes to the colleges, teach on financial engineering. Because you cannot control the inflation, you cannot control the monetary policies, you cannot have interest swaption, and how to control the inflation, how to control the money supply. So many things involved. It's a highly technical. So you need to have a computer background. You need to know the statistics. You need to know the economics. You need to know that calculation of numbers. About financial engineering, it talks about more on applied mathematics. Then only you can devise the tools and techniques and model to finance. So financial engineering has deeply penetrated in the financial market with its application in all core functions of the financial service. Okay. So financial engineers serves on 3 roles. Friends, today I'm trying to review very, very basic of what is financial engineering, the scope of financial engineering, and how it is working, and the tool of financial engineering, and the financial engineering versus financial analysis, and also how the opportunities are available in the financial engineering. And this is what today I'm trying to cover. And also the growth of financial engineering. This is what I'm trying to give you today because it's a very big subject. We cannot go beyond that area. So financial engineers serve 3 roles. One is that each were deal makers, that is mainly marketers, the idea generators, they are innovators, and the loopholes exploiters, that is outlaws. So if you want to be a financial engineer, you have to play a 3 role that you should be a deal maker. That means you have a marketer, and you have to generate a lot of new ideas, and you need to have loopholes. What are the loopholes available in the financial systems that needs to be exploited? Then only you can innovate the product. So when we talk about the tool of financial engineering, we can divide the tool into 2 parts. One is the conceptual part, another is a physical part. Conception means what you understand the conceptual concept. Concept is called conceptual. The ideas and concept, and you need to understand the valuation theory, you need to understand the portfolio theory, hedging theory, accounting relationship, and tax treatment. So these are all the basic tools are available to innovate. Okay, am I clear, friends? So you need to have a concept, then become an expert in the financial engineering. What are the physical tools available to you? Physical tools are fixed income securities, which the deposit, government securities, all kind of debt instruments, which are all called fixed income securities. Then equities. From the equities, we are giving derivatives. Derivatives means the futures, options, swap, and all these things are a physical tool from which you take a tool and make a difference. Now there is a little bit confusions about the financial engineering. Is it the same of financial analysis? See, we talk about today just with our professor that we talked about the technical analysis, fundamental analysis, that is called security analysis. No, financial analysis is from financial. We need to clear that the financial engineering is a pure and innovative tools, whereas financial analysis is doing a post-mortem, analyzing what is the facts are available. So both are distinctly different. So analysis is defined as the process or method of studying the nature of something in order to determine its essential features and their relationship. So when we study about the balance sheet of a company, what is the sales? What is the sales related to its the capital? What is the profit? What is the capital? The profit relation to the capital employed, the return on capital, EPS, P ratios, and sales ratios, all kind of ratios. You know that when you do that, it's only the relationship between the each features. To understand why we do the analysis. Analysis is to understand the financial health of any company, whether it's a financially sound or a bad or a moderate, a good or bad, whatever may be. Analysis. But the engineering is different. Engineering is the process of formulating and implementing a new instrument, a new process, or a creative solution to a problem. You understand? So let us confuse between a financial engineering and financial analysis. Both are different subjects altogether. So that, see, let me go a little bit on the theory side so that you get a, Marshall have classified the growth drivers of a financial engineering. That means what? What contributes the growth of the financial engineering? Because without understanding that, we cannot involve in that. So we need to understand what factors driving the financial engineering, what factors contributing growth of financial engineering. That is divided by, Marshall is one of the economists, and he divides that and intra-firm factors. These two are the factors which contribute the growth of entire financial engineering. So we have to be, explosive growth in the financial engineering, because we have seen that probably I have been in this field from 1990. The Harshad Mehta episode, the capital market have drastically changed its functioning, its effectiveness, structure, everything have changed. After the Harshad Mehta's came, the lot of innovative financial instruments have been invented in the equity markets. Even let us talk about this currency futures. The currency, see, if you, just 10 years ago, we do not have a currency futures in our stock exchange. Come on. Even today, we trade on oil futures, crude oil futures, gas futures, the commodity futures. A lot of things we have been innovated. The reason is that there are two factors which drives the growth of this. One is that environmental factors and infra-firm factors. Increased volatility. What do you mean? Each one have got its own impact. I can talk about each one hour. Again, what is the increased price volatility? Like, for example, stock market. Today, it's almost 400 points have been down since. Bank, almost around 700 points are down. The price volatile. And gold price have been volatile since last year. It has increased more than 40%. Whereas the oil have fallen from almost $140 to a $14, sometime a minus price. Again, this improved to $41. So there is an increased volatility happening in the market. So globalization of the market, because few years ago or a decade ago, we were isolated economy. Now that our economy have been integrated with the global market. So we cannot survive without looking at America, without looking at China, without looking at UK. People talk about, when pandemic came, emotionally we were talking about, that no, we will ban China. China is bad. We should avoid China. All these things are happening, but you cannot. We have to be real. We have still today almost 35% of our imports are from China. That does not. I'm not supporting the China. I'm not talking about good about China. That is a different. Politics is different. When we talk about economics, that globalization markets, we need to understand that can you live today without China? Very difficult. Even if you plan today that we are going to live without China, probably it will take another 20 years if you consistently work on the line. So tax asymmetries, that is another financial problem, is the tax management. Technology advances, that like the cryptocurrency, wants invention of the currency. How I will manage my currency now? How I will manage my investment? And advances in the financial theory. The theories are every day, new theories have been invented. And regulatory changes, RBI, SEBI, IRDA, so many regulatory changes, and increased competition of the business environment. So these are all environmental factors which drives the innovation of engineering product, financial product. What is the intra-firm, within the firm, intra-firm factors? The liquidity needs, because I will explain is risk aversion and agency cost, quantitative sophistication and management training and accounting benefits. All these things are a growth rate. We'll see one by one the factors driving the engineering such as price volatility, tax asymmetry, and risk aversion by the managers. It has resulted in many innovative and customized financial products for individuals and also a corporate to achieve their specific objectives, be it an equity or a debt or insurance, banking service, derivatives. So financial engineering has innovated the financial product across the categories. Okay. So that according to Matter 1990, typically there are 6 core functions performed by the financial systems. Because when we study about the factors, we should also understand the financial systems. Facilitating the exchange of goods and services with a payment system, that is facilitating where these financial systems are going. Providing a structure of pooling of funds, providing a mechanism for transferring of time and across geographic region and industries, region industries. You understand, transferring the economic resources. We talk about, a lot of people talk about a natural resources. What is a natural resources? You have a oil, you have a steel, iron ore, so many things are natural resources available in the country. So there is the economic resources. What is an economic resources? Basically a funds, which are transferred from one region to another region and also industry to industry. So devising a process to manage the risk. Manage and also control the risk. Making coordination of a decentralized decision making in various economic sectors more natural by providing a price information. So the providing means to handle asymmetric information and problems. So these are all the areas where the financial systems are playing. That little because I'll just rush through. We do not have much time, probably another 10 to 15 minutes. I hope that you bear with me. Price volatility. What do you mean by that? Price volatility occurs due to mismatch or service. For example, price volatility in a share market or in a commodity market. Volatile. Today, you know that when we talk about probably that now the market is over. Otherwise, I would have shown the live market how the volatile price today. And the State Bank of India is opened at 341, closed at 324. Okay, HDFC opened up for so much price and less. And Tata Motor opened at 1,251, closed at 1,229. Price volatile because the ultimately, the law of economics. What do you mean by economics? How the price is determined. The price is determined by the law of demand and supply. If more demand, the price will go up, price will go down. But volatility, why volatile? Price changes, it's okay. It not be volatile. 10 o'clock one price, 10:15 one price, 10:20 another price, it's become volatile. So price volatile can pose significant risk for individuals and also a government. Tata Steel for my investment at 1,250 rupees. Within a minute, within a second, it has come down to 2,000 to 1,220 rupees. That means price volatility. It makes a lot of difference. If I bought 1,000 shares, that means I have lost immediately 20,000 rupees in a market. So as an individual, then I need to manage this. There is a significant risk exposed to my investment process. So the next issue is environment factor is that globalization of the market. Globalization has led to the development of multinational companies, which have their sourcing, production, and consumer base diversified across the countries. Due to this phenomenon, the companies are exposed to a high risk fluctuation in interest rate and exchange rate. Because of globalization, you know that most of our iron ore are exported to China or in Japan. Now China and Japan consuming a large amount of steel iron ore, and India also consuming, but whereas war are going and the price are determined by Chinese market or a Japanese market. So the steel price last 1 month or few months, you would have gone almost more than 40 to 45% of the market because of the globalization factor. It's not only steel, there are so many items. Even our salary. Today, because of the globalization of the IT industries, all the people are working in IT companies are getting a much more better salary than employed in an engineering company or in any other trading companies because of a globalization. So tax asymmetry is what? Tax asymmetry is a result of the differences in the effective tax rate for a company across industries and the countries. There is a differences. So it's not a symmetries, it is asymmetries. So historically, companies have exploited the tax asymmetry in many ways to become a more profitable. Why people are investing from US to India? Because there is a tax exemption on the capital gains. There is a tax advantages. Why somebody goes an investment in a export incentive area? There is a tax differences. So you need to innovate a product to manage this. So technology advances have made access the transformation of the vast amount of information easier and expeditious. With these capabilities, there lies many opportunities and challenges for the whole financial systems. See that what we are doing now, online class, it's a technology advances. It is a problem. Knows that what is the problem because of the pandemic, because they have created so much physical assets. You have a classrooms, you have lab, big investment on the buildings and the furnitures. Today you can't open it because of the technology. Still they are able to education through an online system. There is a challenge in the financial system. So you require some kind of instrument which manages the risk. So advances in the financial theory. So in the first few decades, there have been numerous contributions to the financial theory by as well as an academician, which have resulted in innovative trading instruments, elaborate predictive models for the institutions. New market and market linkage is also technologically enabled. We have been linked with today sitting in India, I can investment in a mutual fund in America. I can also investment in foreign currencies. So again, all these things are innovation of financial engineering. Okay, so the regulatory changes like SEBI and the Reserve Bank of India or IRDA or so many regulatory authorities in the financial market. So there is a complex so many things which also relate to for growth engineering drivers. Okay, the banks and brokerage houses now carry a broad portfolio of financial product to cater their demanding clients and are heavily competing on a price and value-added services offered with this product. Even I can put an example of ATM. What is an ATM? ATM is an innovative product of financial engineering. Okay, ATM. You have a SIP card, you have a debit card, you have a credit card. Today you have a Paytm. You just transfer Google Pay. Google Pay is an innovative financial product. Okay. So that the intra-firm factors, which are all within the company, within the business, what are the problem, that the liquidity and see how to manage the liquidity of finance, how to put cash, how to manage the cash. You require a large amount of innovations, money market account, sweep accounts, electronic fund transfer, and commercial deposits, certificate of deposit market. risk aversion. You know that it's the biggest problem, for the entire finance managers. Friends, I tell you that we can talk about. I am telling you that if you are all being a students, I give you each 100 crore rupees, and to manage, then I will ask you to give me a 12% or 15% or a 10% return in a year without loss of my principal. I am telling you that is the toughest job. Don't think that money management is very easy, because it requires a diversified that policies and risk management tools. Otherwise, it's very, very difficult to manage money. Okay. So product innovations through financial, what is that? In precisely whatever this 45-50 minutes we talked about is that what is the motive of the innovation of product is just a risk and reward trade-off. Ultimately, the entire innovation through financial engineering is that how to manage my risk and take reward. That is the underlying line every one of you need to understand. So the financial instruments are increasingly being designed to minimize the uncertainty. That is what I explained to you. When you talk about the risk, it is uncertain. Then I cannot avoid uncertainty, because certainty or uncertainty is not my hand. For example, see, death is my risk. I may die at any time. I cannot avoid my death. A person who born has to die at some stage or other. What best I can do that I can take as much of Medicare and hygienic care, everything to prolong my life, postpone my death. That means that minimize my uncertainty. That is what I can do. That is an innovation of health instruments. So there are many customized financial products are available in the market, which suits the very financial requirement of the individual as well as the corporate. I'll just go through this. So equity, basically, that when you talk about a financial product, innovative product, and mutual fund are the supreme examples of financial engineering, which has revolutionized the debt and equity market, which again is a very lengthy subject. If I go into the mutual fund, I can quote almost more than 100 type of schemes are available for every mutual fund, like hybrid securities and that low-term securities, mid-cap securities, large-cap securities, and combination of various kind of debt instruments. All these things are innovation of financial engineering. Mutual funds provides retail investor ability to diversify this fund across industrial sector at a low cost. It suits to everyone's requirement. It suits to everyone's requirement. We give a lot of options available. Brokerage houses which focus on a particular asset class, industries, and designed to suit each one. Like, the preference shares, DVR shares, sweet equity shares, and ADR, GDR, IDR, and warrants. Index bond, convertible bonds, deep discount bonds, debentures, floating rate bonds, and a catastrophic fund, secured premium notes, dual currency bond, foreign bond. And like that, there are so many kind of every day. These are all very few I have noted. So there is a large number of instruments are available in the equity and debt market. Insurance is another area where with significant financial engineering innovations, with the insurance policy designed to based on the need of the customer, such as child education plan, retirement plan, pension plan, and insurance policy also being offered based upon the time frame, such as a term insurance. You have 1 year premium so much, multiple 2 years premium so much, or 5 year premium so much, whole life insurance same as money back policy. Like there are so many kind of all kind of invention to suit the either individual or a corporate need for the providers as well as for the subscribers. Okay, so unit linked insurance plan or the hybrid products which provide dual benefits of insurance and investment to the investor. See, normally insurance is a risk management product. Because of the innovation, financial innovation, it has become investment as well as an insurance product. So insurance companies have also forayed into capital market with the insurance backed bonds. Even today, the government is selling, I don't know how many of you, gold bonds. You know that it's one of the best investment options with the 2.5% interest available from the investment of gold bonds offered by Government of India. Okay. Banking products, e-banking, mobile banking, electronic fund transfer, online instant loan, which has significantly enhanced the customer's experience and brought down the cost for banks. You need not go to the bank today. By sitting on your computer, on your laptop, you can apply the loan, you can subscribe, you can transfer funds. You know, these are all, you know, innovation of financial engineering. Derivatives again, very big, you know, features and options. You know, today you have an index future, you have a stock future, you have a commodity future, you have a currency futures, the options, you know, options with the various price combinations and so on. So derivatives are extensively used by corporates, quantifying and allocating, you know, and managing the risk of underlying asset by trading them on it. It's an excellent hedging tool for the exporters, for the importers, as well as for the business people. Each one have got, I'm just trying to give a macro level picture of the financial engineering, you know, that innovative products, what we are having today and what likely to come in the future also. So the adoption of the financial services, we see many FinTech companies are emerging in India, because Professor also have told me in the beginning that you are going to talk on financial technology, FinTech. I know the business model based on financial engineering products and services. I just to give you a startup, you know, Gurgaon-based startup, Faircent, which is a peer-to-peer lending platform that connects lenders with the borrowers. It has the feature that automatically matches their lender and borrower based on their requirements and sends proposal to the borrower on behalf of the lender based on pre-selected lending criteria such as loan tenure, amount, and risk profile. This is a financial. Friends, I tell you another interesting, you know, it's not a financial engineering, it is a social engineering. Social engineering platform, innovation of, you know, matrimonial. That is an excellent technological platform which matches the bride and bridegroom, you know, that is a social engineering innovations. Okay. So the like that financial engineering platforms, you know, the FinTech also start yearly salaries, taking the concept of salary advances to the masses. It provides salary advances and instant, you know, cash loan and provides smart risk to the scoring system. These are all, you know, MSY has applied a financial engineering to provide affordable payment acceptance modes to SMEs. MSY also is a mobile add-on that allows smartphones, features phones, and tablets to accept the credit card and bank transaction, thus enabling SMEs to provide their customers a wholesome experience. Lending Card provides easy and fast working capital financing solutions to entrepreneurs and SMEs. The company has developed technology tools based on big data analysis, which facilitates lenders to evaluate the borrower's credit worthiness. These are all required, you know, that application of when you develop this kind of a financial platform, you require, as I told you in the beginning, that you require an application of mathematics, computer knowledge, you need to know the statistics, and also you need to know the financial systems, which helps you to innovate a lot of products. So I try to summarize, friends, and also summarize over, then we will open for a discussion. The financial engineering has revolutionized the financial markets by introducing innovative and customized financial products for individuals and corporate to achieve their specific objectives. Okay, follow me. So financial engineering has also aided to the innovation of processes and distribution in the financial services industry. So technology has been both source and enablers in this innovative journey. From the development of complex financial models, predictive analytics, design and distribution of financial product, trading of instrument to provide ultimate every aspect of the financial engineering. So the information technology companies have a major role to play in the sustainable growth of financial services industry. So this is what a little bit, very, what we have talked about this another 15 minutes is just a mini cool of the financial engineering, but to make you understand what is the financial engineering, how it is applied, what is the necessity of that innovation of product, how that penetrate into the financial systems, and what are the factors which drives the growth of that particular industry. Okay. So if you want to have, these are all some references I have, that books to understand this subject better. Friends, with this, I conclude my session. Probably the session is open for a discussion.
Any clarifications from any one of you? I think it's a very fundamental session where Sir Annamalai sir has brought to you all the new terminologies of the finance in the future of finance industry, right? So especially about big data, everything comes over here. Big data, predictive analytics, we're talking about. All these, what is the purpose? That one line, key line, I noticed that continuous better customer service. You know, that's what end of the day, it's about the better way of reaching your clients and customers, making them possible in the higher profitability, higher value attainment. If that is done, I think that is where the new models, business models are moving towards. And this is a beginning, and we have a lot more to go. I think next 2-3 months, we have a lot of works to be done. And it's a good auspicious day. We have our eminent person, Mr. Annamalai sir, has initiated this for us. And thank you very much, sir. If no other questions, we will meet up. Of course, we will be, you are part of us, and you know, thank you for all your support and being part of us, you know, our training team, sir. So any clarifications, any one of you? Not, we'll meet up in another session, and I think they have to take these all new terminologies and digest and think it over. And there are references given. You can take it and you can just go and refer to it. And I think day after tomorrow, we have planned a session on our brainstorming. So we will see what can be done. So we'll discuss further about it later. So I think with this, we will try to conclude this. Is that fine, sir? Annamalai, sir. Thank you so much, sir, for your good time, and have a good evening. And thank you so much, sir. Thank you.
Have a nice time.
Anyone? Any question? Yeah. Otherwise, it's fine. Thank you, sir. Thank you so much, and have a great evening. And we thank Mr. Suresh from ACS for coordinating this event, as well as all the teams, and also our students and our alumni for joining this occasion. Thank you, everyone. Thank you, faculty members as well. Thank you, sir. Annamalai, sir. Thank you so much.
Thank you, sir.